Hello, everyone. Welcome to this week's Investment Trends, where we discuss the latest news in the stock market and the economy. And obviously, joining me today, once again, is John McKay. He's our portfolio manager and a chartered financial analyst. We'll be breaking down what has occurred so far in the first 6 months throughout the stock market and the economy and what drove some of the returns that we did see. We'll also discuss some of the latest trends going on this week and obviously some things that we can look at towards the back half of this year. So, John, just looking at how the market has performed these first 6 months, it really was a tale of two quarters. So we saw a bit of a pullback in the first quarter, followed up by a great rebound in the second quarter. So, what were some of the things that stood out to you?
Yeah, really looking at earnings, that's a big story as to why we saw that great bounce back in Q2. The Q1 earnings were phenomenal for the most part across the S&P 500, and that's really reflected in not only the S&P, but each of the three major indices with double-digit gains in the second quarter. Um, Nasdaq's up over 10% on the year now, and the Dow and S&P are just right around that 10%, about a percent off. That said, Wednesday morning we got word through the news that the president has called off the ceasefire with Iran, and that's kind of spiked volatility again in the markets. We saw crude Wednesday morning jump about 6.2%. Dow futures were down about just under a percent before open. And each of the indices is down, between a half percent and a percent at the time of recording. We're also seeing treasuries across really the developed world spike, which is never a great sign for the broader market. I don't see this being a super long-term issue, but in the weeks or months to come, as this conflict continues, I'd expect volatility to remain present.
Yeah, absolutely. We saw a lot of that throughout the first 6 months of the year. The on again, off again ceasefire and what that has done to the markets. Typically, when we hear these news, we see a couple percentage point swings in the positive or negative direction within some of these indexes. And obviously the price of oil. So, for many people, we saw a pretty steep run up so far this year. I think it was up pretty significantly, and that seems to have come down a little bit over these summer months. So a lot of people are predicting that the flow through the Strait of Hormuz will still be backed up for a couple of years. However, there are some articles out there that are stating that it seems like our oil supply is still strong, and there's actually a bit of an oversupply in oil.
Yeah, that'll be interesting to see how everything plays out. You can also find in the last couple of weeks articles noting the US and China really eating into their petroleum reserves to kind of keep that price per barrel in a place where the general public can stomach it right now. Um, if we see it jump beyond 120, 130 a barrel, that's you start seeing prices across the market for anything that has oil as an input or a byproduct start to climb. Um, so we're not certain where the petroleum reserves are at this point, but that's something to keep on mind as we look at this continuation of the Iran conflict.
Yep, absolutely. So that's obviously, like you said, something that is driving the market. Also in the news has been, the new Fed chair, Kevin Warsh. He's had, a meeting now, and some of the meeting minutes are being released. It seems like the Fed is a little bit split, with some people wanting to keep interest rates steady, with where they're at. And they're also keeping an eye on inflation and where that might lead to. There's also maybe some possible talks of an interest rate increase, which would be a pretty steep pivot from what President Trump was hoping for with this new Fed chair. So Something to keep an eye on would be, news from the Fed, what they might do, how interest rates might play a factor into the overall stock market.
Yeah, and Warsh really did want to work on shrinking the Fed's balance sheet and using interest rates as kind of the primary tool to enact his regime's vision for the U.S. economy. Um, with this issue in Iran, I think that's going to be a more slow and deliberate um, chain of events that he works to shrink that balance sheet. When they do that, it's referred to as quantitative tightening, might be the term that you hear on CNBC.
Yeah,
And that's going to be a process of, um, reducing the money supply and really cutting off some of the liquidity. So slowing the spigot, so to speak.
yeah,
Um, I don't know that we'll see that this year. And like you said, I think it's becoming more and more likely that we see an interest rate hike in the next 6 to 9 months.
yeah. Yeah, and that would obviously send some shockwaves through the stock market. So, one of the things that we did see this year is some of the Mag 7, which has historically the past couple of years really been a huge driver of stock market returns, pushing these indexes higher. They've actually started to underperform the market. So, some names like Apple. Obviously, Microsoft is down pretty big year to date. Amazon is obviously a little bit flat, just kind of low single digit returns on a year to date basis. However, even though those stocks, which played a large portion of, fed into these returns, we still saw some solid performance in the market. Seems like things are starting to broaden out overall in the market.
Yeah, we're seeing, you know, some good opportunity in the um, energy X oil space as these hyperscalers start to look for solutions for maybe off-grid energy. There's a ton of R&D going into that area right now. Additionally, industrials have been a pretty safe space to be in year to date. I think looking at that Mag 7, it's really going to tie into um, the public's willingness to both use and have data centers a part of their communities. We see a lot of pushback right now. If that continues, I think we're going to see some continued struggle in those big names.
Yep. No, absolutely. So something to look at, and then also as we wrap up here, just a couple of names, couple of stocks that have been making some movement this week. Could be some opportunities in the portfolio. So obviously we saw a pretty steep pullback on Tuesday with SpaceX. That was actually the day that they got added to the Nasdaq index. Pretty sharp sell off there. It dipped below, that 150 number. So obviously that stock will probably continue to see pretty steep volatility, trading in and out there. Some other stocks that have been beaten down recently. Netflix is one. So they report earnings next week. So it's an interesting time for that stock. They got hit pretty hard. Year to date, it's down pretty significantly from where it historically has traded. So something to keep an eye on as we head into their earnings reports next week. Also, Tesla's been pretty volatile. Trading on Wednesday down as much as 7% as well. They did release a new model, kind of that YL, which is a little bit bigger version of their car. So things to keep an eye on. Again, maybe if you see some opportunity within those stocks, it could be stocks to look at.
Yeah, absolutely. And Tesla's had some pretty phenomenal news on car sales in the last couple of weeks. So, um, as much as they say they're pivoting to, that humanoid robot as their basis, we are seeing pretty surprising numbers on their sales. So um, I think a drawdown could be, you know, kind of the cult of Musk splitting as to where people want to put their money between SpaceX and Tesla.
Yep.
I think volatility is to be expected, but still some phenomenal opportunity in both those names.
Yep. Well, great. So that's all we've got for this week. If there's any certain sectors or stocks that you're following, feel free to leave a comment below. The content of this video is intended for informational and educational purposes only. Nothing presented here constitutes investment advice, a securities recommendation, or solicitation to buy or sell any financial instrument. The views expressed are our own as of the date of this recording and are subject to change without notice. As financial professionals, we may hold or manage client accounts that hold positions in the securities and companies discussed in this video. Those positions can change at any time. All data and information referenced is sourced from publicly available materials believed to be reliable. However, accuracy and completeness cannot be guaranteed, and past performance is not indicative of future results. All investing involves risk, including the potential loss of principal. This content does not account for your individual investment objectives, financial circumstances, or risk tolerance. We encourage you to conduct your own due diligence and consult with a qualified financial, legal, or tax professional before making any investment decisions.